I have a really bad feeling that some stuff's coming. And, they've been systematically attacking the highest levels of success. And I think they're about to go down into the DeFi space. And look, if you can literally change the rules after the game starts, that's a tough environment for founders and entrepreneurs and investors to win, right?
In June of 2023, the US Securities and Exchange Commission filed lawsuits against Binance and Coinbase for operating unregistered exchanges and failing to register tokens and services as securities. FTX's CEO was also charged with fraud in May, while the operator of Helix faced Bank Secrecy Act charges in April. The SEC's enforcement actions have impacted the crypto industry, resulting in the closure of companies and the delisting of tokens. Despite the actions of the SEC and prevailing reservations surrounding cryptocurrencies, financial companies have recently begun to show keen interest. Fidelity and other major financial firms such as BlackRock, ARK Invest, and VanEck have entered the race by filing applications for spot Bitcoin exchange-traded funds. In today's video, Mark Yusko expresses his suspicions about the timing of the recent applications for ETFs by traditional financial companies. It is possible that the SEC's changing stance on ETFs is simply a reflection of the changing market conditions. However, Yusko believes that there may be more to this story. Don't forget to hit that like button and subscribe to our channel, ensuring that you stay ahead of the curve with the latest news in the world of cryptocurrencies.
This is a massive, concerted, intentional effort, right? And people say, oh, no, it's just coincidences. No, they're not coincidences. It's not a coincidence that we're getting these announcements now with the big, BTC, I mean, not BTC, the big fintech. TradFi is the word I'm searching for, Austin. Sorry. Big TradFi company saying, "Oh yeah, we want to do this." BlackRock, we want to do an ETF for crypto or for Bitcoin. Really? I mean, think about this. Not a month ago. I mean, it's not even like a year ago or 2 years ago or 5 years ago. Not a month ago, the SEC was like, "You're a villain if you're even touching this space. You're bad." Now, everybody, I mean, Deutsche Bank this morning and Fidelity over the weekend and BlackRock last week, and, everybody's jumping in the pool.
In a survey of global banks conducted by the Bank for International Settlements, 80% of banks said that they were either somewhat or very interested in offering cryptocurrency-related products and services. The survey also found that 60% of banks had already invested in or traded cryptocurrencies. BlackRock, a global investment management firm with over $10 trillion in assets, filed a spot Bitcoin ETF application with the SEC in June of 2023. ARK Invest and VanEck followed suit with their own spot Bitcoin ETF application in July of 2023. However, despite their applications, none of these proposals have received approval from SEC as of yet. The cryptocurrency industry eagerly anticipates the SEC's long-awaited decision. The approval of a spot Bitcoin ETF would undeniably mark a momentous milestone, offering investors a streamlined and regulated avenue to include Bitcoin in their portfolios through established financial channels. Yusko, however, suggests that the SEC's prolonged delay in approving ETFs may not simply be a matter of timing, but rather a calculated facade. He raises suspicions about the US government's regulatory approach to cryptocurrencies, contending that it lacks neutrality and instead appears to strategically favor certain entities or interests.
Look, I've been talking about this for a long time. Everybody was applying, and the Winklevoss twins and Van Eck and my friends at a bunch of different firms, we're trying to get an ETF approved, and I said zero chance, like no chance any one of those was going to get approved. People said, "Well, why?" I because BlackRock is the only one that's ever going to get approved. And people say they haven't even applied yet. Like, they will, and they'll get approved. And so, well, why do you think that? Like, well, because they're part of the tent, right? You're either under the tent or you're outside the tent. And all of us who are trying to disrupt those under the tent, look, the trust business has had a great 800 years. That's a long run. 800 years of us, the plebs, trusting the banksters to safeguard our money. And we pay, this is a crazy stat, we pay globally $7 trillion with a T every year for banking, assurance, auditing, brokerage, all the trust industry, financial services, broadly speaking, 7 trill every year. And the truth technology, right? We're going from trust to truth with blockchains, can get rid of most of that, if not all of it. They don't like that, right? Because that's somebody's revenue. And those people are really powerful. They make the laws. It's the golden rule. He who has the gold makes the rules. So those under the tent are going to do everything they can to keep those outside the tent from getting inside. And if that means changing the rules so that they get to control it.
The SEC has recently released a new regulatory framework for decentralized finance products. This framework aims to classify DeFi protocols within the federal securities laws by designating them as either exchanges or investment contracts. However, critics argue that the framework suffers from an overly broad and ambitious scope. This broad interpretation has sparked fears that innovation within the DeFi sector could be stifled, as developers may be hesitant to create new products due to the potential burden of SEC regulation. Hughes, a senior counsel and director of global regulatory matters at Consensus, has been vocal in his critique of the SEC's framework. He asserts that the framework fails to consider the unique characteristics of DeFi protocols. According to Hughes, a more nuanced approach is necessary to strike a balance between regulatory oversight and fostering innovation within the DeFi space. Meanwhile, as cryptocurrencies face criticism due to concerns surrounding volatility, energy consumption, and potential illicit activities, central banks are actively exploring the concept of CBDCs. According to Yusko, CBDCs should not be considered a viable alternative for people. Yusko believes that central banks are interested in CBDCs not because they believe that they're a better form of money, but because they want to gain more control over the financial system. Yusko further suggests that the government's actions, such as the recent SEC lawsuit against FTX, are designed to instill fear and create a sense of unease.
Again, not a coincidence. The day of the peak in 2021 was the day they allowed the Bitcoin futures ETF to happen. I mean, it's the day. Well, why does that matter? Well, because the banks and people like BlackRock could go naked short. You could create paper negative Bitcoin. You could go short Bitcoin. And that pushed the price down and got all the weak hands to fold, all the leverage out of the system. Then they sacrificed FTX to make it appear that, bad people doing bad things, even though there's not much going on there. I mean, it's kind of like FTX to me reminds me of Madoff, right? They called Madoff a hedge fund problem. But there was no hedge and there was no fund. I mean, he hadn't made a trade in 13 years, so there was no hedging going on. And he was literally, his brother-in-law was taking the money and putting it in Bernie's account. There was no fund. It was just a bad person doing bad stuff. And that's the same thing. So, Alameda was this big trading firm. No, they weren't. Look at the data. They were not big. They were not sophisticated. They were not good. They lost their ass in Luna, which precipitated this whole thing. So I think it was part of the whole wrapping it all back to choke point. I think it was all part of the kabuki theater to make people afraid, just like the Silicon Valley bank run was part of the kabuki theater to make people afraid of banks. Well, why would you want to make people afraid of banks? Well, because they're going to give you a solution. coming up pretty soon called the CBDC. And if people think that's a solution, you're just not paying attention, right? You should be very, very, very afraid of CBDCs.
What about you guys? What do you think about this recent turn of events? Let me know your thoughts in the comment section below. As always, be sure to like and subscribe, and we'll see you in the next one.